Hey everyone, it's Mike back with another episode of Habitual Finance. And this week I want to talk to you about something I wish I knew a little earlier in my career, but better late than never. And that is called an HSA. So, this is one of the options that you can choose from the health insurance that your company provides you, if they provide you with health insurance. So, this is on top of these are I'm just throwing out numbers here, you have your deductible still, you have, and then if you go to the doctor's visit or the dentist or whatever, they cover 80% of your bill, and then the other 20% is yours. You have to pay the other 20%. And what I'm going to talk to you about is super helpful towards helping you pay that other 20%, or for any prescription drugs that aren't covered, or other doctor visit type things that aren't covered. So this is all on top of it. You've probably seen this before if you've looked through your medical benefits from your company. But what I want to share with you is the huge benefit that I saw in an HSA, especially compared to the other two that my company offer, which is an FSA and an HRA. So I'll quickly go over those two, and then I'm going to get more in depth on why I think the HSA totally blows the rest out of the water. So to start, the FSA is, you make your contributions towards your health insurance per every paycheck that you get. And say for the year it's $1,000. And then your company matches you $1,000. So you've got $2,000 every year to use towards health expenses. But when you're young, you probably aren't going to be using them too much, and especially if you don't have a family. So you probably won't use it. And then the next year it doesn't roll over. Maybe if anything, $500 will roll over. I think that's what one of my plans offer. But that's not useful because you're losing all this money you're contributing, especially when you're not using it at all. So, you may not think too much into it when you're younger, but you're really going to wish you had more money banked up as like a little rainy day fund if any type of health accident happens. And so I really am not a fan of the FSA at all. But if it's all your health insurance provides, then of course go for it. The next one is an HRA. And this is what I used to have before I realized what an HSA was. So an HRA is, again, you make your contributions every paycheck and your company matches it. We'll just keep with the same theme here of 1,000 and 1,000. So you have $2,000 a year. But this time it kind of banks up in this little company bank, I'll call it. So as long as you're at that company, every year the money you don't use towards health expenses builds up. So 2, 4, 6, 8, etc. continuing. And obviously you can decide to contribute more, and then when you get raises every year, hopefully the percentage will increase and you'll be saving more. So that's good. That's definitely better than the FSA in my opinion. And again, some companies only offer HRAs and FSAs. And in that case, then definitely go with the HRA. But the downside here is it's only in this little bank that doesn't gain any interest at all. And as soon as you leave that company, for any reason, laid off, fired, retired, whatever, it's not yours anymore. That money's gone. So you better hope you used it, which is, useful while you're in that company, if you're there for a while, or if you plan on staying there until you retire. But then after you retire, you better hope that you have enough saved up or invested or whatnot to cover the rest of your medical expenses. And now, I want to tell you, now moving on to the HSA, the Health Savings Account, which I think is incredible. It blew me away, and I was mad that I missed out on 3 years of investing in it. So what this is, it's again kind of similar to the HRA. Again, I'll use the same theme of 1,000. You contribute 1,000 per year, and your company matches 1,000. So, but what you can choose to do with that money is there's a little bank of funds. I get a debit card. And there's a little bank that has using the debit card, I can swipe my debit card on medical expenses only, and it will come out of this little bank. So you can choose to keep all of your money in there if you want, if you don't trust yourself in the, investing, which you should, because it's very simple. But so you have this account with $2,000 in it, and you can just keep contributing to that. Have 10, 15, 100,000. Just keep accruing, and just leave it all in there. Or you can decide to bring some over into an investment account, within the same health insurance, within the same HSA savings account. But they're just two little, it's like a checking and a savings account almost. So you have them. So what I do is I keep $2,000 on my little debit card that I can use instantly for anything that I need, which I never really use it. If I have to pay any out of pocket, especially this young, I don't bother. I just let it all build until I'm older. And so anything over $2,000, which is all my money right now, all the money I contribute, all the money my company matches, goes into an investment account. And it just depends on who your company provides. I think we have TD Ameritrade. So through there, I pick stocks for the rest of my health savings to be invested in. So this is insane. It's like a Roth IRA as well, almost. So I have $2,000 in there if I ever need it. And then I have all my other money going in there, constantly being contributed towards. And then this is all going up with the market over time. So I'm making interest on it. And, dividends will get reinvested and all that good stuff. And you don't pay any taxes at all on your gains, similar to a Roth IRA, which I think is incredible. And you can keep this money. So if you switch jobs, right now I'm 26. If I switch jobs, super young, I would still have that money in this little HSA account. It's mine forever. I can leave it in there and just let it grow, and then when I retire one day, I'll know I'll have it. Or, if you retire, you still have it. If you get fired, you still have it. It is yours, which I think is great. Totally blows out the HRA. Makes the HRA look useless if you have the option to choose both. So the other great part is, say that you've been contributing to this HSA, and I mean, if you've been contributing and your company's been matching and you've been at this company for like 30, 40 years and you retire there, you could probably have like $750,000, $1 million in there. Who knows what? It depends on how well your market did, and that's great. And before you're 65, you can use all that money towards, you can always use all that money towards any medical expenses, prescriptions, doctor's visits, and when you're older, you're going to need more of that, unfortunately, as we all know, so it's better to be prepared for it. But you have it, like as opposed to the HRA where it's gone. Once you retired, that's all gone. You better hope that your Social Security, if it's still there, or your investments are going to be paying for it, because it's not like an HSA. So this, I think everyone, if you have the opportunity, should invest in this should invest in the HSA, because it is something you will keep for life. And then after you're 65, you can use that money, which I don't recommend, but you can use that money towards anything you want. And I think you would only pay, you can use it towards anything you want. If you use it towards, so think about it like that too. It's like an extra retirement fund. So it's just another great investment stream that covers more than you would ever have to imagine. So for me, when I retire, I'm picturing myself having a 401k, a Roth IRA, and maybe Social Security to take care of me. But then I just recently found out about this HSA, which will really take care of me when it comes to the medical expenses that I know are going to happen, because it happens to everyone when you get older. So it's just this extra investment. Like, just imagine having this extra $500,000, $1 million, whatever it is that you contributed to go towards your medical expenses. You don't even have to worry. You don't even have to like think about, oh, is my 401k going to be enough? Is this going to be enough? Is that, am I going to have enough? It's like, you don't even have to bother, because even when, obviously, as you're growing older, 65 plus, that money, if it's still in there, is still going to be growing and growing and growing with the stock market. So ideally, you'll always have some money put away for any health related, expenses you have. Again, like I said, you can use it towards, after you're 65, you can use it towards anything you want without penalty. But I don't recommend it. I recommend using your other investment vehicles like 401k and Social Security and all that, and maybe a part-time job. Use that. Save this HSA for health-related reasons, because you just never know. And it's just an extra layer of a peace of mind that you have. It's an extra stream of income you'll never have to worry about, hopefully. So that's my rant. I couldn't wait to share this with people. I actually went around my office and I was telling people, especially the ones that have families and who just started, all about this HSA. I'm like, do you guys have this? Do you invest in it? Is this what you do? And they're like, no, what is it? And I spent like a little decent amount of the day, a couple hours, explaining to people what it is, what I learned, and why it's better than these other accounts for their families and for themselves. And I actually got all of them to switch over to it. And so I wanted to share that with you guys too, because I think if you have the chance to contribute and invest towards an HSA, you definitely should. So that's it for this week, guys. Thank you so much for listening to me. Any questions you have, I can definitely get into more detail. Give me a comment below or send me an email if you want it to be private. I would love to help you out. Give me a thumbs up on this video if you liked it, and subscribe to my channel if you haven't. I'd really appreciate it. And thank you guys for listening. Have a good week. Bye.